Hey guys, so I'm gonna do a video on how I set up my trading like a business. And this is something that I learned from one of my mentors, Stock B, which is run by Pradeep Bonde. The main reason why you want to think of your trading as a business is so you can standardize and organize the whole process. And once you have a standardized process, you can have standardized results. So if you're doing the same thing over and over again, taking the same types of trades, the same setup, same entries, same exits, you're going to have very predictable results, and that will make your equity curve smoother. This will also shorten your decision-making time. And as a swing trader, this is very critical because as soon as you see a chart, you should be able to say whether it fits your criteria or not, and whether you want to be entering or exiting it or not. And most importantly, I think it makes it very easy for you to troubleshoot and optimize your trading. So, for example, if you have a big drawdown in a particular week or a particular month, and you just feel like, I'm just not getting this trading thing and I'm not going anywhere and I don't know why my results are so bad. If you have a standardized process, it's going to be very easy for you to figure out what exactly is going wrong and to fix it. So you can go back into your process, go through each step and figure out which step is broken or needs some kind of repairing, and then get back to smooth linear trading. Organizing your business is also going to reduce your mental load, and it will simplify your trading in your life. In general, I live my life on the philosophy of keep it super simple, and thinking of your trading like a business is going to help you do that. So another thing that Pradeep preaches is be the Marie Kondo of your trading. And I really like that analogy. So if you don't know who Marie Kondo is, she's this lovely lady who has her own Netflix show called Tidying Up. And she goes into people's homes and organizes it. And that itself is life-changing for them. They feel so much freer and happier. And you need to be the Marie Kondo of your own trading. Organize everything, and you're going to feel a lot more confident, happier, and stress-free as a trader. Another analogy that he uses is to think of your trading like a Dunkin' Donuts. And Dunkin' Donuts, as you may know, is it's a coffee and donut chain like Starbucks, which is all around the US. We have thousands of branches, and they have a very, very organized and precise process flow. Right from the time the store opens to the time the store shuts and a customer enters, there is a clear list of instructions for each barista on how to serve them, and they also have clear process flow diagrams for each of their recipes for the donuts. They have standard processes for how to make them, and as a result, they have a proven business model or a formula which is highly repeatable, very standardized, very reliable, super quick, and made it very easy for them to scale from one outlet to the thousands of outlets they now have around the world. This is exactly what you want to do with your trading as well. You want to have a proven business model or a formula, which is basically trading with a positive expectancy, and then rinse and repeat, rinse and repeat, rinse and repeat, and keep turning that edge over and over again and making money. So there are 5 components for organizing your trading like a business. The first and the most central one is having a business plan. Now, just as if you were starting any business and you would create a business plan to pitch to investors or banks when you borrow money or explain to anyone what your business is about, the same way with your trading, you must have a written set of trading rules which are akin to your business plan. The second thing you need is a factory. In this case, It's my scanning and charting software. My choice for this is DC2000, and I'm going to be doing a video which will give you the exact layout of my DC2000 along with all the formula indicators and scans, everything that you need to know on how to do this. The next thing you're going to need is a spreadsheet. Now, this can be an Excel sheet or a Google sheet, but think of this as the headquarters of your business. This is where all the important trading decisions will be made, such as what size should I enter, when do I exit, etc. And these decisions will inform your factory on what to produce. Now, the other thing you'll need is a brokerage account, and think of this as a warehouse. This is where you're going to store all your shares. So everything that you buy and sell will be held in your brokerage account. And I'm also going to give you a few tips on which brokerage account to pick, which brokerages are good, and a few tips on how you can configure the settings of your brokerage account to make trading simpler. And the last thing you need is access to ongoing training and education and development, just as you would in any other profession or if you were starting any other business. So it's really important for you to keep up with the rest of the world, know what's going on, what's new. And for traders, this is YouTube, books, and Twitter. And I'll also be giving you a few tips on how you can use Twitter to make the most of it, and what YouTube resources are the best and what books are the best. So these are the 5 components that you're going to need to set up your trading like a business. So I'm going to do each of these in detail. I'm going to start here, go here, and then do 2 separate videos on how I set up my factory, my DC2000, and how I set up my spreadsheet, my headquarters, because those are going to take a much longer time to explain, and I want to do it in detail. Okay, so let's start with the centerpiece of the whole business, which is a business plan. And by this, I mean written trading rules, not something that's in your head or you have a vague idea about. It has to be written in black and white. Now, for me, I'm just showing you an example of what my business plan looks like. These, for example, are my sell rules. And these, for example, are my rules on when to take a loss. And I have shared all of these in previous videos that I've made and posted on Twitter. I have clear process flows about how I enter stocks, how I make my watch list, how I position size, how I scan, how I sell stocks, etc. This is not meant for you to copy and use verbatim, but this is more of something that can give you an idea of what your own business plan needs to look like. So use these as inspiration and as a starting point. And these rules will be and should be unique to you based on your own personality. It took me around 10 years to solidify these. So if you don't get them right on the first go, that's okay. That's natural part of the process. Keep iterating on them. But eventually, your goal is to come up with a written business plan which has clear trading rules for every part of your trading. Now I'm going to talk about brokerage accounts and give you a few tips that you can use when you're choosing and setting up your brokerage account. So this is a question that a lot of you have been asking me if I have any broker recommendations. And what I use is IBKR and Schwab. Though I am in the process of moving out of Schwab, because if you live in the US, then you know that there's some question about how sustainable Schwab is going to be in the long run after the regional banking crisis. And so I'm in the process of moving the Schwab account to a bigger bank like JP Morgan. But IBKR is my absolute favorite, and I just love how versatile their brokerage platform is. Basically, regardless of which brokerage you choose, and if you're outside the US, this is going to be different. My biggest recommendation would be that you pick a large publicly traded company. You want to avoid the mom and pop brokerage houses. They might try to incentivize you by giving you free shares or discounted trading fees. But in the end, the first goal is to make sure that your money is in a safe place. And with these mom and pop brokerages, you never know when you're going to wake up one day and the company has just gone under, or the website no longer works, and the customer service is not picking up your call, or it's non-existent. So stick to a company that is publicly traded, and that's going to give you the best odds of keeping your money safe. Now, the other thing that I've learned over the last 10 years of trading is that you want to split your money across 2 brokerage accounts. And I know this is not a very popular recommendation, and I haven't heard of anyone else saying it, but this comes from my own trading experience over the years in different countries and different places. So a lot of times what might happen is that one of the brokerages, say IBKR, is just down for the day. And either I'm not able to log into my account for some reason, or the entire company's server is down, or there's so much market volatility that orders are not going through properly. There can be a lot of different reasons why you might be locked out of your brokerage account on a certain day. And this happens more often than you think. And it can lead to a lot of panic and anxiety if all your money is in that brokerage account and all of it is put into stocks with really tight stops. So what you can do in that case is, if you have a second brokerage account, you can hedge that entire account in the second brokerage account and make sure that you don't net lose any money on that day. And this will come in super handy because, one, I can hedge all my positions, and two, it means that I can still continue trading for that day. Just because IBKR is down doesn't mean I have to shut business for the day and not be able to take any trades. Say we're in a raging bull market and there's a lot of good setups and you really want to take them, you still have another account where you can do so. So this is what I do. I have split my money across 2 brokerage accounts, and that really has saved me from a lot of anxiety and panic when I wake up in the morning and there's an issue with either one of them. Now, the other one, this is the biggest tip on how to set up or configure your brokerage account, and that is to use auto-attach bracket orders. Now, what is auto-attach bracket orders? I'm going to show you an example of this and also talk about how you can get this setting and what the benefits of this are, but I highly recommend doing this. So if you're using IBKR, and this is a screenshot of my IBKR, I've just blocked out my account number. You can go in configurations, under presets, go to stocks, and you're going to find 2 options here. One is a target order or a profit taker, and one is an attached stop order. You want to activate both of these by setting these numbers. So in auto attach, you want to say it's a limit order where the price is the parent order plus 20%. This basically means anytime you put in a parent order, say you're buying shares of Apple at $100, it's going to auto attach a profit taking order to sell those shares at 20% higher, or in this case, $120. And this just gets put into the system at the same time as your buy order on Apple. Now, an auto attach stop order is the other side of it, which is that every time you put in an order to buy a stock, let's say Apple again at $100, it's going to put in a stop order at 10% below the price of your parent order. So in this case, it would be a stop loss order that gets put automatically into the system at a $90. Now, what is the advantage of this? This is so that in case you ever forget to attach a stop loss order or a profit taking order, one gets put into the system by default by the brokerage, and you're always managing your risk. Now, you can change these numbers based on what your own trading metrics are, but I highly encourage you to put at least some sort of auto attached stop order so that you're never ever trading without a stop loss. And if you're a beginner trader, definitely do this. Once these orders are put into the system, I can go and manually change the amount. Say my actual stop loss on Apple should be 97 and not 90. I can manually change that number and say I want to take a profit at $110 and not 120. I can manually change that number as well. But at most, this setting makes sure that I never lose more than 10% on any given trade. Now, I also just want to point this out. This is a question I often get. One of my rules is that you shouldn't have more than 2 unsafe positions. So you'll often see me having 3 or 4 unsafe positions in my end of day position update. And that is just because I split my money across 2 brokerage accounts. So 2 in each, and that's a maximum of 4. Now, another question that I keep getting asked is, do you put your stop loss in the system or in your mind to avoid stop loss hunting? And will ask, do you use mental or mechanical stop losses? Now, this is super important. I always use mechanical stop losses. And this is through a lot of trial and error and heartache in the last 10 years. Stop loss hunting is definitely a myth. Unless your position size is long enough, you're trading like 100 million or a billion or more, your position size of 10 shares, 100 shares, 1,000 shares is way too small for an algo to target. And think about it, like what is the reason for putting a stop loss in your mind? Say I want to put a stop loss at $97 on Apple, and I just keep it in my mind. When Apple does come down to $97, what am I aiming to do? At that point, there shouldn't be any choice. There shouldn't be any decision to be made. It's very clear you have to sell. That was your original stop loss. So it's just the best to make it mechanical, make it part of your trading factory, and not have to think about this or waste time on this decision. And in God forbid you ever make the other decision, which is to just keep holding it and see if it comes back up, that's even worse. And that's going to ruin your portfolio economics in a big way. So use mechanical stop losses. And the best way to do that is just use auto attach bracket orders. So I now want to talk about Twitter. And Twitter can be the best and the worst place for you to meet traders and learn trading. I want to give you a couple of tips on what I've learned through the years on how best to make use of Twitter and how to avoid all the negativity and crap and scams out there. So the first step would be to use TweetDeck instead of Twitter. This will help you organize your Twitter in a very logical and easy to use way. So the way that I have done it is I have my home here where I get a constant stream of tweets from the traders that I follow. And I have a separate list here, and you can create as many lists as you want, where I only get news flow. And I only have a few accounts that I've added to this list of news. And this list is public, so you can see that as well. And you can add it to your TweetDeck. But it basically gives me a running stream of all the breaking news on the market. And then I've added a few streams such as notifications, DMs, and search columns, and you can add those as well. And Twitter helps, TweetDeck now has the feature of multiple layouts. So I use this one for my trading and then this one for my personal life. So you can you can quickly organize it in that way too. Now, the second most important thing is that you want to follow a very carefully curated list of traders. There are thousands, hundreds of thousands of accounts of traders on Twitter. Not all of them are real. Most of them, in fact, are scams. And you want to be very, very selective in who you follow. So when I started using Twitter, I probably used to follow like 1,000 different people because I didn't know who was legit and who wasn't. And over the years, I have narrowed it down to less than 100 traders. And anytime someone starts posting a lot of irrelevant material, or I see them post something that is illogical or dangerous to other traders, then I quickly unfollow them and always keep pruning this list. The third thing, if you really want to make the most out of Twitter and learn from some of the best traders in the world, be kind and be respectful. And if you have questions and you ask them in a kind and respectful way, traders are so nice, they will go out of their way to help you out. But if you're an ass and you're just gonna shit post or post hate speech, you're just gonna get blocked and there's really no point in, you're just gonna be wasting your own time. So this is very similar to life. If you're kind and respectful, you'll have a lot of friends, people will help you out, and you will enjoy life a lot more. And if you're not, the world is going to be a sad, lonely place that you end up hating. So choose who you want to be on Twitter. And the last is you want to block the negativity. And I'm going to show you two different tips on how you can do this. This is what I've learned through the years, and it now saves me a ton of time, ton of energy, and a ton of headache. So let me show you what those two are. The first is to use muted words. So I have a list of around 500 words that I have muted from my Twitter feed. So I don't see any posts that contain any of those 500 words. And this includes all sorts of words that are political, or that are sports related, or like COVID related, or even abusive words, vulgar words, hate speech, all of those kinds of things. And it's not that I don't like sports or anything. Of course, I love sports, but it's just that that is irrelevant to my trading. And if I'm looking at my stream during the day, during the trading hours, then I don't want that to appear on my stream. So it's just a way for me to focus my attention into the places that are most productive during trading hours. Now, the second tip, and this one comes in handy if you are someone who has a big enough following and a lot of notifications. You want to mute notifications from people who either don't follow you or have a new account or don't have a profile picture or haven't confirmed their email. Because these are likely not serious traders who use Twitter to learn and grow. And by adding these filters, I have blocked out 99% of the negativity and hate out there. So if any of you who have any of these violations even send me a message or respond to my post, I will most likely not even see it, and Twitter will not notify me about it. So sometimes I have friends who text me saying, hey, this person is shit posting about you, or good job not reacting to the negativity. And I'm like, I don't even know what you're talking about because Twitter doesn't even notify me about all of that. And I prefer it that way. And frankly, I don't care. Haters gonna hate, traders gonna trade. You choose which one you want to be. Now, if you're following other traders on Twitter, then there's a few things you need to keep in mind, or it could be disastrous for your account. On Thursday, I posted a trade where I entered BFRG and exited it on Friday, and I will show you exactly what the trade was. But last night, which is Sunday night, I got this message in my DMs saying, I bought BFRG at 7.45. It had a shakeout on Friday and went to 6.62. I just found out it has a high fee to short the shares. I'm sure it will be down at least $1 tomorrow. Do you think BFRG is a pump and dump? I did not want to put this on your page because I'm embarrassed about my purchase and no stop loss. So the first thing I did was ask him if I could use his message to discuss this in the video. And I told him I would keep him anonymous since he said he was embarrassed to post it publicly on Twitter. And after he gave his consent, I decided to include this example because I think there's a lot of things that can be learned from this. So first, let me show you what I did with my BFRG trade. So on Thursday, April 20th at 10:14 in the morning, I had gone long BFRG and posted my reasons for doing so. And the chart at the time, this the daily, the weekly, the hourly, and the 5-minute. This was the amount of risk that I took, and I had a stop loss at the low of day. And for me, it was a swing trade. And throughout the day, I kept updating what I was doing with BFRG. So at this point, I was playing very defensive because the market was in a choppy mode and my account didn't have much cushion. So as soon as BFRG went up a half hour, I actually moved the stop loss to break even. And I mentioned that it was because it got a burst of volume, it was making a new high of day, and it's a biotech, and I didn't want to carry overnight risk without a big cushion. So either it would work or I would sell it at break even, and this was part of me playing defense. A few minutes later, BFRG went to 1 hour, and that is usually when I anyways would move the stop loss up to break even. So I noted that it's definitely a safe trade. And after a while, I actually moved the stop up even higher to the swing low on the 5-minute. And I posted the chart here and mentioned my stop loss here. And I mentioned the reasons here because it's a biotech, which are very susceptible to gap downs and wild swings. And it was the end of day. And by the end of day, I had sold half of BFRG at 2R, and I carried the rest into tomorrow since I had some cushion. Now, the next day in the morning, my trailing stop loss hit, this trailing stop loss at 1 hour on the second half of the position. So I sold half at 1 hour, half at 2 hour, and net made 1.5 hour on this trade. And I was pretty happy with it. It was a quick, profitable trade. In fact, someone even asked me, how did you find BFRG? And I just shared my watch list from the previous day, and you can see BFRG is on there. So it was a well-planned and well-executed trade. These are my entries and my exit confirmations. I'm just posting my trade confirmations in case anyone's curious about the exact numbers. Now, this is what I did and this is what I shared. You can see this on the chart as well, on the daily chart. This was where I bought it. On the 5-minute chart, you can see the volume had started coming in. It had started going up. It was on my watch list from the previous night. I entered here, went up 2 hour, took profits here, moved the trailing stop loss up to this low. The next day, that trailing stop loss hit, and I got out an average of these two cells, which was around 1.5 hour. It was a clear, simple trade for me. Now let's go to his message and see what we can learn from what mistakes he made so that Phil and everyone else, including me, who is always learning and always growing, doesn't make any of these mistakes again. So the first thing I noticed when I read this message was that he bought BFRG at 7.45. Now this is 4.5% higher than where I entered BFRG. And if you're going to follow anyone's trades on Twitter or any other chat room, any service, you are inevitably going to be late. Think about it. By the time I bought BFRG, calculated my position size, updated my spreadsheet, put the arrows on my chart, wrote out the tweet, posted it, you saw it, you checked out the chart for yourself, you calculated your position size and entered the stock, there's going to be a huge time gap, right? If it's a real breakout, the stock would have gone up by then. And you are going to enter much later than the person who actually took the trade did. And that's always going to hurt you because it's going to ruin your risk reward. So you never ever want to copy anyone else's trades because you're inevitably going to enter late. Now, the next thing I noticed was that BFRG actually went up 20% from his buy point of 7.45 the same day itself. This would have given him a good profit, and it really made me wonder what his rules for booking profits were, or if he even had any. If you guys have seen some of my other videos, then you know that I have clear rules on when to take profits, and something like this would have triggered me taking at least half of my profits on the position, which I did. I did book profits in half the position at 2R, and I was wondering what he was really looking for in this trade if he did not even book a single penny once it went up 20%. The next thing I noticed about his message was that he said it had a shakeout on Friday and went down to 6.62. Now, 6.62 is actually 15% lower from his buy price. This made me wonder if he had any rules to move his stop loss to break even. If a stock is up 20% from your buy point and then goes down 15% from your buy point, that's a 35% move. In any situation, I would definitely have moved my stop loss up to break even if it had gone up 20% from my buy point. And if you guys have seen my video on when to move my stop loss up to break even, I clearly talk about how important that is and what my specific rules for doing that are. So I wonder what he was doing in this situation. The other thing I wondered is if he had clear rules to cut losses. And this is probably the most important part. Because if you don't have clear stop loss rules, and I discussed mine in another video, it can completely ruin your account no matter how good the rest of your trades are. And if you guys have seen this video, then you know that one of my rules is never let a stock go down more than 12% from your entry point, because the math works geometrically against you at that point, and it's going to have to go up a lot more for it to come back to your break even. So I was wondering what his rules for cutting losses were, and if you don't have any, that's one of the first things you want to think about before you even put real money into the market. The next thing I noticed was that there was a lot of post-rationalization going on in this message. And this is a very common human tendency. Once you are stuck in a position and you have real dollars on the line and it's emotionally hurting you or pinching you, you tend to rationalize your decision, or you tend to you tend to have confirmation bias and think about you tend to think about the decision in a way where you did not make a mistake, but the market is just temporarily wrong. So what made me think this? When he says that I think BFRG just had a shakeout on Friday, I wondered what made him think that, because that's not how I analyzed it. It was just a shake. By using the words shakeout, I think what he means is like a temporary dip where it's going to shake out a lot of holders and then pop right back up. And personally, for me, I have no idea what BFRG is going to do from here on out. And neither do I care, because right in the morning when it hit my trailing stop loss on the remaining position, I took my profits and I got out of the stock, and I even stopped tracking it. But if you're still holding it, then you tend to think of any dips as shakeouts. And be hopeful that the stock will actually come back to where you bought it from. Another huge red flag was, I am sure it will be done. Just the words I am sure are the most dangerous words that you can use to discuss anything about any stock in this market. The one thing you need to know is that no one knows for sure what's going to happen to a stock. This could be up 200% tomorrow or down 200% tomorrow, or whatever, 100% tomorrow. Like literally no one knows what's going to happen. So using words like these means there's still a lot of experience that needs to be gained and a lot of humbling that needs to come out through that experience in the market. Now, the last thing I noticed was, if you don't have clarity about what your process and what your setup and what your rules for selling and buying are, you're going to be asking a lot of irrelevant questions. So in this case, he asks, do you think BFRG is a pump and dump? I would ask him, how does it matter? This was supposed to be a swing trade. It gave you a 2-hour move. You took your profits, you got out. Now, whether this is a pump and dump or a blue chip company or like the next Apple, does it even matter? That's not part of my process. It's not part of the setup that I'm trading, and it doesn't change my rules in any ways. So these were the things that I wanted to share that I learned from his message. And I think a lot of new traders find themselves in the same position, especially after they try to copy trades from someone they're just following on Twitter. So I hope that you learned something from this as well, and this was helpful. The intention in no way was to reprimand him or embarrass him in any way. I just wanted to probably encourage you to think about creating your own rules and being very, very careful if you're following anyone on Twitter. Twitter, if used right, can be a really helpful tool in learning and engaging with other traders, but following blindly is one of the pitfalls. And this is something that you definitely need to be aware of as you use this tool to improve your trading. Now, the last part of your training and development, other than Twitter, is using YouTube and books. And these can be a fantastic resource if you know how to use them correctly. So obviously, if you're a new trader, it can be really confusing because there's millions of videos on trading and millions of books out there. So you may not know what's good, what's bad, or where to start. If you're interested, I did make a short video about what my top 5 trading books are. These are ones that I own physical copies of in my library and read over and over again. And I would recommend you read the good books 100 times versus reading 100 different books once, because these are dense and you're not going to absorb the information right away. And I also have a playlist in my account called Best Relearning, where I keep adding new YouTube videos that I find super useful from some of the best traders that I have learned from. And you can access this through my account. These are all free and they pretty much contain everything you need to know to learn the basics of trading. So in my next video, I'm going to talk about how I set up my TC2000. And I just want to give you a sneak peek into what this is going to look like. So I share my entire layout, talk about how it's organized, what each different box is going to be like, and I'm going to share with you every single scan, every single indicator, every single formula that I use, and also post a link below the video of the layout so you can use it as a starting point just to get started, and then obviously customize it to your own trading. So I hope you found this video useful, and do let me know if it was helpful and if you have any questions. Thank you so much.